one fund, 3,700 companies, the entire U.S. stock market. Collins says, for most people this is genuinely all you need. Here is exactly why. What if I told you that one single investment purchased in under 15 minutes could give you ownership in more than 3,500 companies simultaneously? From the largest technology giants in the world to small emerging businesses you have never heard of, that fund exists. It is called VTSAX, and J.L. Collins, author of The Simple Path to Wealth, says it could genuinely be the only investment most people ever need for their entire investing lifetime. In this video, we are breaking down exactly what VTSAX is, what is actually inside it, the real historical numbers, and the exact steps to buy it yourself today, if you choose to. VTSAX stands for the Vanguard Total Stock Market Index Fund, Admiral Shares. Let's break down what that name actually means. Vanguard is the investment company that created and manages the fund. Notably, Vanguard is structured as a mutual company owned by its fund investors, which aligns its incentives toward keeping costs low for investors rather than maximizing profit for outside shareholders. Total stock market means the fund does not just track a subset of large companies like the S&P 500 does. It tracks essentially the entire investable U.S. stock market. Large companies, mid-size companies, and small companies, all in a single fund. Index fund means it passively tracks this market rather than relying on active stock-picking decisions by a fund manager. And Admiral Shares refers to a specific share class that Vanguard offers, which carries an even lower expense ratio than their standard share class in exchange for a higher minimum initial investment, which we will discuss shortly. So, what companies are you actually buying when you purchase VTSAX? The fund holds more than 3,500 individual U.S. companies. At the top, by market value, you will find the largest and most well-known American companies, major technology firms, leading healthcare and pharmaceutical companies, large financial institutions, and significant consumer and industrial businesses. These largest companies represent a proportionally larger share of the fund's total value simply because they are larger companies in the real economy. But the fund does not stop there. It extends all the way down through thousands of mid-size and small companies across every sector imaginable: energy, real estate, manufacturing, retail, biotechnology, and more. This is the key insight. When you buy VTSAX, you are not betting on any single company, any single sector, or any single trend. You are betting on the continued growth of the American economy as a whole across every industry simultaneously. If one company fails completely, its impact on your overall investment is minimal, because it represents only a small fraction of a fund containing thousands of other companies. Now let's talk about cost, because this is where VTSAX truly separates itself. VTSAX carries an expense ratio of approximately 0.04% annually. To put that in perspective, that means for every $10,000 you have invested, you pay roughly $4 per year in fees. Compare that to the average actively managed mutual fund, which often charges around 1% annually, 250 times more, roughly, for the same $10,000 invested. We covered in last week's video exactly how dramatically this fee difference compounds over decades, often resulting in well over $100,000 of difference on a substantial portfolio over a 30-year period. VTSAX's extraordinarily low cost is possible specifically because it is a passive index fund requiring no active management team, combined with Vanguard's unique ownership structure, which is specifically designed to minimize costs for fund investors rather than maximize profits for external shareholders. You will frequently see VTI mentioned alongside VTSAX, and it is worth understanding the relationship between the two. VTI is the Vanguard Total Stock Market ETF, an exchange-traded fund that holds virtually the same underlying companies as VTSAX, with extremely similar performance and an equally low expense ratio. The practical difference comes down to how you purchase them. VTSAX, as a mutual fund, traditionally requires a minimum initial investment, commonly around $3,000, depending on current Vanguard policy. VTI, as an ETF, can be purchased for the price of a single share, which fluctuates with the market, but is typically far more accessible if you are starting with a smaller amount of money. If you do not yet have the VTSAX minimum, Collins's guidance is straightforward. Start with VTI. There is no meaningful long-term disadvantage to remaining in VTI indefinitely or transitioning to VTSAX later once you have accumulated enough to meet the minimum, should you prefer the mutual fund structure. Let's look at actual historical performance. A total U.S. stock market investment has, over long multi-decade periods, delivered average annual returns in the range of 7 to 10%, including dividends reinvested, despite living through the dot-com crash in the early 2000s, the 2008 global financial crisis, and the 2020 pandemic-driven crash. This does not mean every single year delivers positive returns, far from it. Some years are sharply negative, but the long-term average, smoothed out over decades, has been remarkably consistent with this range, reflecting the underlying growth of the American economy over time. It is worth emphasizing again that past performance never guarantees future results. Markets could behave differently going forward than they have historically, but the consistency of this long-term pattern across a century of dramatically different economic conditions, technological eras, and global events is the strongest evidence available for the value of staying invested in a broadly diversified fund over a long time horizon. Here is exactly how to buy VTSAX, step by step. First, open a brokerage account. This can be directly with Vanguard or with another major brokerage that offers access to Vanguard funds such as Fidelity or Charles Schwab. The account opening process typically takes about 10 minutes online and requires basic personal and identification information. Second, link your bank account to the brokerage account, which allows you to transfer money in. Third, transfer the funds you intend to invest, remembering the minimum investment requirement if you are purchasing VTSAX directly or considering VTI if you are starting smaller. Fourth, search for the ticker symbol VTSAX or VTI within your brokerage platform and place your purchase order, specifying either a dollar amount or a number of shares depending on the fund type. Fifth, and this step matters enormously for long-term success, consider setting up an automatic recurring investment so that a set amount transfers and invests automatically every month, removing the need for you to remember or actively decide each time. This single step does more for long-term investing consistency than almost anything else you can do. So there it is, VTSAX, completely explained. One fund. Over 3,500 companies, an expense ratio so low it is almost negligible, and a historical track record that has weathered every major economic crisis of the past several decades while still delivering substantial long-term growth. Collins is not exaggerating when he says this single fund could genuinely be enough for most people's entire investing lifetime. But owning a great investment is only half the equation. The other half is psychological. Staying invested when markets inevitably become volatile and frightening. That is exactly what we are covering in next week's video. every major market crash in history, what actually happened afterward every single time, and the specific checklist Collins recommends for staying calm and staying invested when it matters most. Subscribe now so you do not miss it. See you next week.